What's going on? Welcome back to the channel. Today we're going to talk to you about Archer Aviation. I want to go over some of the data points, what's really moving it, and whether right now is a good time to buy or not. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So on Friday, it did go down 7.8%. Very volatile day, 720 the low, 821 the high. So we did have initially a lot of macro fears really plaguing the market. A lot of them kind of went away halfway throughout the day though. But we also had the market digesting their earnings. And so they did beat on earnings per share. Revenue came in at 0, so they missed by 400,000. Still nothing too crazy because I feel like Wall Street doesn't really care so much about this, rather the future guidance. And I think Archer did have some fairly good guidance. They did mention about the whole government shutdown being a little bit more of a sticky thing for regulatory approvals for them. But conveniently, we did get some good news on Friday. And so this came out pretty much 1 hour before the market did close. And it just said US Senate Democrats on Friday scaled back their demands to end the 38-day government shutdown, the longest in history. And they just had pretty much one kind of request. And so I think this is good. Most likely, we're going to have some further updates over the weekend. But especially Archer mentioned that this is kind of dampening their future outlook and really slowing things down. This obviously is going to be now rectified. So in my opinion, I think that's kind of a good thing as well. I think for future guidance, the whole Hawthorne, if I'm saying that right, I think that really did save them, definitely. So I think that's going to make things easier and whatever else. This is some of the risks and concerns that was kind of highlighted from their earnings. So feel free to kind of pause it and go through it. I think anyone saying that this is a home run is definitely being kind of over exaggerating. They are making a lot of good progress, but I do really agree with some of the kind of issues that they have and concerns that it's going to be a very capital intensive nature and business. So that's kind of the first point right there. So anyone saying that, hey, like, you know what, I'm good with dilution, you better put your money where your mouth is, because I think a stock like this is going to need a lot of capital for the foreseeable future. So just wanted to kind of say that. I'm here to give you the good, the bad, and the ugly. If I didn't mention that, then what's the point, right? So aside from that though, I'm not really going to dive deep into their financials all too much because yeah, there's not really much. And I think generally speaking, just Wall Street doesn't really care so much about that. It's just the future guidance. And I think given the circumstances, so it will be a very good domino effect. So for instance, if we do get the government shutdown kind of rectified over the weekend, that does mean that this upcoming week, we're going to have a lot of key data. And so a lot of which technically has been paused. So Friday we have PPI retail sales. Then we also do have on Thursday initial jobless claims. Then we also have CPI, so that's going to be a big one as well. And that's pretty much it for ones that would have been paused that could really impact the market. But if we start getting a lot more labor linked data points, then the market will possibly assume a cut for December. So that in among itself would really help this stock. So we pretty much have two very positive catalysts that could really push this stock a lot higher than what it is. One thing to take note of though, based on the quantitative data, it does show the valuation being a C+. So arguably this is a good value at this stage. So even looking at Seeking Alpha analysts, they have a average as a buy, 3.92. Wall Street sees it as a buy, 4.14, and then quantitative data as a hold. A couple of things that's really dragging it down is just the revisions and profitability, but I think that's pretty clear. So it does have some good growth, momentum, and valuation. So again, it kind of signals that it's a pretty good value play. A lot of big money was getting into this stock on Friday. So for instance, we had 153.8 million shares being traded. 70 is the average. Looking at both the secondary market and also the dark pool, you saw a lot of transactions. So big money was definitely trading it, which is always good and welcomed. These are some of the transactions that did occur on the dark pool though. So dark pool is often enough used by shorts, and hedge funds. And so when it comes to shorts, I always like to analyze what they do and everything else. So 14.67% of the free float is being shorted, works out to be 79.6 million shares overall being shorted. Cost to borrow average 0.62, DTC 1.7 days, and that did drop quite significantly. It went from about 3.3 to where it is now. And I think just generally shorts kind of knew that they were overextended, so that's why they went from about 20% short interest or 21% in end of September, early October to where we are now. So DTC does factor in the average volume for the stock in comparison to number of shares being shorted. So kind of crazy stuff. Moral of the story, I don't really see this being a squeeze play unless there's some big acquisition that does happen. But the fact that only 15% of the free float is being shorted, I think that's fairly good and bullish, that shorts see a lot more upside. On Friday, they did increase 334,000 shares on a side note, and then through IBKR, it does indicate about 5.2 million shares. And it's fairly cheap to short this stock because cost to borrow is 0.3. That's an annual rate, mind you. So I always like to, again, analyze this because if shorts really did feel that this stock was done and finished, they could easily throw all they can at it and really just kill the momentum right fast, but they didn't. So I see that as relatively optimistic. From a bull standpoint, going into this upcoming week, you see a consensus for it to be kind of between that 8 to 850. Bears are anticipating for it to be sub 750. So definitely a lot more upside for this upcoming week. With it right now at 818, it is smack dab in the middle between this S2 and this S3. Because of this stock being fairly volatile, this is why you have very wide gaps. I'm looking at the 1-day chart on a side note. So 859 is going to be that key level to really get over early on in the week, this upcoming week. Then 980, 1177. Flip side, 662 would be that next strong support. Personally, I don't really see that being touched, despite a lot of the kind of red flags that was brought up in their earnings. I don't really see that being on the table. Rather, with all the potential catalysts coming out, market might see that as good reasons to buy the stock and really push it higher. So realistically, I do feel like we could recover. So just kind of stay tuned for that. Aside from that, though, on the actual chart itself, on Friday, it was brutal, very bad. And I think just generally leading up to that day, it was just kind of a losing type of scenario because it did break below recently that 10-day moving average, also the 150 and 200-day moving averages. So all the key ones that generally investors like to look at in a lot of momentum stocks, that blue line right there, that 50-day moving average, that essentially is like a dagger. Anytime a stock does break below that, usually results in like a 20 to 30% push lower. And that's kind of what came to fruition ultimately. I think their earnings as well kind of just expedited that a tad. But nonetheless, because of how much it's dropped so much so fast, it has caused stochastic RSI to be considered extremely oversold. So going into this upcoming week, I do feel that there is a good opportunity for a nice V-shaped recovery. Analysts seem to be fairly optimistic, so we did get a couple of buys. So we had Cantor Fitzgerald maintaining their $13 price target, HC Wainwright 18, Needham, they did downgrade, but they still kept it as a buy, 13 to 10, and I think generally that's whatever, nothing too crazy, and still does represent a pretty good upside. So moral of the story, this stock is going to be fairly volatile, but at least for right now, I think it's a pretty good value and could really go up from here. So let me know your thoughts on that in the comments below. Don't forget to hit that thumbs up and subscribe. Hopefully everyone's having an amazing weekend thus far. Then one final thing, pop over to my stacked account if you're looking for some solid buy signals on stocks, options, crypto. So I did launch multiple different tiers. Just launched this actually about 24 hours, 48 hours ago. And so I do have a tier that is $10 just for swing trades. Even though a lot of stocks got hit very hard over this last week, many of the ones I put out for swing trades have been absolutely on point. So definitely worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.